Live. So, ladies and gentlemen, welcome to another A Million or the Moon live stream. We have some very special guests with us. We got some people from Fiat and from Famous to help us to help educate us on what's going on in the world of Pulse Chain DeFi and DeFi in general. So, welcome, gentlemen. How are you doing?
Doing well, sir. Thanks for having us on.
Yep.
Yeah, no
I'm
worries.
doing well. Thank you.
Right on. That's perfect. So I really appreciate you guys coming on. And, why don't we begin here by getting you guys to introduce yourselves. Just tell us who you are, how you got into crypto, and then we can delve into the projects from there.
Why don't you go first, Dylan?
Sure. I've been in crypto since 2017. The top, right? In December of 2017. I actually watched Bitcoin top. I think it was like the 19th or the 20th of December. And I was on some obscure ticker website, just watching the volume going in and out and stuff, and it was extremely exciting to watch. And ever since then I was hooked. I found Richard Hart through one of his infamous live streams where he was debating Roger Ver, and famously Roger Ver got really pissed off and flicked Richard off and then just ended the live stream right there. And been following him since 2018. Been in Hex since day one. That was really exciting night. I still remember where I was sitting when like the whole thing launched and everything, on the 3rd or whatever. But been around in the community, been a Telegram admin for about a year and a half now. Just in the slums of Telegram, helping people and stuff like this. And
Answering the same question a couple times.
Yeah,
Yeah.
Dealing with a bunch of very lovely people. Okay.
Yeah, for sure.
But yeah, so been around here for a little while. Enjoy the community very much. But yeah,
that's awesome. Yeah, those OG Richard Hart streams were some real gold, man.
Yes, they were.
Yeah, I remember when I believe it was maybe the first day that Hex came out. He was speaking to a Tone Vase, was it some lawyers?
Yeah, Tone Vase and 2 lawyers, and he streamed for 8 hours.
That's right. Yeah, he streamed and he hadn't slept either. And they almost the entire thing was them talking about like regulatory uncertainty, Hex being security, and I just remember Richard wiping the floor with them. At least I'm not a lawyer, but that was my impression as just a layman viewing. So yeah, that was really impressive. And that was those OG Richard streams was a large part of what got me interested as well.
I watched that live. That was fun. I was in and out. Like I didn't watch the whole fucking thing live, but
yeah, if it was 8 hours, it's kind of long time.
Yeah, it's kind of hard to do.
Yeah, for sure. Yeah. What about Buck over there?
Hey there, guys. Yeah, so I'm Buck Fiat. I am one of 3 founders of Fiat and now Famous.io. We're a team of traditional finance people with very deep computer science backgrounds as well, in the real world. And a little bit of background on myself, I suppose. I've been working in the investment world for the better part of 2 decades now. I was interested in crypto pretty much from the beginning because it was really born in the wake of the Lehman Brothers meltdown in 2008. Bitcoin came out in 2009. So being a little bit cynical and a little bit jaded, I kind of latched on pretty early to the ideas of trying to fix monetary policy and all these things that really came and screwed up our lives for a while. Back when you guys were probably still in high school or middle school. But this was a marking event in most people's careers. What happened then, and I think we're seeing something similar actually going on today now still in crypto. Actually, a bit of a contagion. I digress. I got into Bitcoin when it got a little bit more user friendly. I myself am not very technical, but my partners are. And I got into it in 2013 after probably trying to buy it earlier than that, but not finding anything easy to use on the internet. Everything looked quite scammy back then. You didn't have Coinbase or, you know, these sort of fiat on ramps. You couldn't buy it with a credit card on your phone. The first time I bought Bitcoin, I literally had to go meet a guy in a coffee shop with a laptop.
No way, that's hilarious. My dad, who was in crypto a while, he did the exact same thing. He used to meet up with a dude at a coffee shop, a Bitcoin miner, some kid who was like a teenager, and he would buy Bitcoin off the kid in a coffee shop. That's crazy.
Yep. So I've gotten to watch crypto kind of go through a journey similar to what's happened in the internet as well. I'm old enough as well that I was around to watch the internet go from being something that was pretty useless. You could maybe send an email in a half an hour to being this thing that we're using right now to communicate and run our businesses and run our lives, right? And I think crypto is on a similar trajectory. It still sucks, but it's already a lot better than it was, right? And it's getting better. And then on the Hex side of things, I've been in Hex since the very beginning. I started watching Richard in 2017 when he appeared on YouTube. Probably, I think I was aware of him before that through the kind of Bitcoin community as well. But yeah, I always liked his values and what he stood for and his sort of cantankerous, argumentative style. I would say I'm fairly similar actually in this regard, and I always respected his views and values on things. So yeah, I've been in Hex since the very beginning. And about a year ago, I went to London to the event we did there, or they did, I should say, for the second anniversary party. And coming back from that, having had a chance to meet Richard and a lot of the other guys, I thought there's a pretty good opportunity here to sort of to build on Pulse Chain and whatnot. So I kind of put together a team of very capable computer programmers, and got to work on our first project, which is Fiat.io, which, as you rightly said, is a fork of Aave v2, which is, if you think about it, is sort of the DeFi version of things like Celsius and BlockFi, these shadow banks that have recently failed. And you look at DeFi, in my mind, it's potentially the answer to a lot of the world of sins. A lot of what went wrong in 2008 is happening now again with things like Celsius and BlockFi, and that is very interesting. Whereas DeFi is transparent, you don't have guys like Sam at FTX committing massive frauds, in DeFi, because you can read the code, you can see what it is. So yeah, I guess that's a bit of a long-winded way of giving you my background and how we got here. Now we're launching a new product as well called Famous.io, and this is going to be leverage perp trading for Pulse Chain as well. These things together provide basically spot and derivative risk management tools so that whales and professional investors alike can manage their risks of their Richard Hart coins and their everything else on Pulse Chain. These are tools that we wanted for ourselves, and we're pretty excited to be bringing them to you guys.
Absolutely. And one of the reasons why I'm excited to talk to you guys as well is because DeFi is incredibly important, because what DeFi allows everyone to do is opt into a different economic system that's controlled by code and not people's emotions and whims. And so that's why it's so important that we get DeFi right in general, not as community members, but as builders as well, and why it's important to kind of spread the message. Now, you touched on a lot of interesting things there, and there's a lot of different ways we can go. But one thing I would be interested to kind of pick your mind on briefly before we kind of delve into the projects, protocols itself, is you mentioned you came from the world of traditional finance. I've recently been speaking to some traditional finance people and trying to kind of talk about the crypto space and why I believe it's superior. So I'm hoping to kind of pick your brain. What was it, since you came from a traditional finance background, that I know you kind of touched on this a little bit, but maybe we can further clarify. What was it about crypto that drew you in and brought you from the traditional finance world into the crypto world?
Yeah, so when you think about it, the world is more or less they try to manage it through central banks. In finance, we call that monetary policy. And then the other side of it is when the government goes and spends money. In finance, we call that fiscal policy. So the levers of monetary and fiscal policy sort of are, the levers that they try to manage the economy through. However, they do their best, but oftentimes, the fiscal side is perverted by politics. The monetary side doesn't always get it right. These things are fallible. They're run by humans, and every once in a while, somebody's asleep at the wheel, and you have a train wreck like 2008 with Lehman Brothers, and it was a series of train wrecks. It really started 13 months earlier, and required the government ultimately to step in with TARP and rescue everybody. Otherwise, we would have gone into a Great Depression, they believe. So, what I see in crypto is the potential to be not necessarily a replacement for government policies monetarily and fiscally, but something that can serve as a check on excesses, right? So if governments generally behave bad sometimes, one way to make them behave better is to have a crypto internet-based economy that they have to compete with, right? It'll actually, I believe, make them behave better overall. And you might be from countries that have relatively enlightened governments that work pretty well most of the time, or you might be from places that don't work so well. But in general, having the option to have cryptocurrency and an internet-based economy is a really wonderful thing for people all over the world. There's a lot of people that suffer because their governments are terrible. You look at the Russians and the Ukrainians right now as a pretty good example, right? And you have to remember that there's people on both sides of that, good people, and like they're stuck in the middle of this thing. And having something like cryptocurrency lets you perform a service on the internet, make money. If your government tries to seize your assets, you can get assets overseas. So I think it's a really powerful check on both governments and also the excesses of capitalism, corporations that might try to influence or might try to co-opt governments, right? You could argue large multinational corporations have probably too much power at the moment, I'd say, too much sway over politicians because of the way elections work, right? So I do think crypto can be a powerful check on all those things and make this a better place.
That's a great point, man. It's a tool to democratize economic energy, because if we look at the traditional finance landscape, it's the both the rules and the feature set are almost entirely monopolized by either a handful of private entities and or the government. And so you're right, cryptocurrency essentially acts as a competitor. And if you have a competitor right beside you with a superior feature set and superior fundamentals, you're almost kind of forced to try and appeal to the market. So yeah, that's a great point, man. And look, I want to delve into what these protocols are all about. But before I do, I have one last question to kind of get to know you guys a little bit better. So I wanted to come up with a little bit of a unique way to get to know you guys, because I think it is important to understand the people behind teams. And so I have this question, and feel free to skip it if it's a little bit touchy or for whatever reason. But I would like to ask you guys, both you guys, if you guys can recall something difficult that you've gone through in life. What is one of the most difficult things you've gone through in life, and what have you learned from that? We can skip it if it's a hard question.
Dylan's very young. No, I've got plenty of things that I can talk about. Yeah, look, I've been in positions where I've been, effectively stranded financially in a sense after in the wake of Lehman Brothers, right? The people that I was working for, basically got eviscerated, right, by the financial crisis, right? So I would have been a young guy in my early 20s when this happened, and I was living overseas, and and when that was pretty much one of the worst moments in your career, if you think about it, to find yourself sort of looking for a job or a way to pivot or something like that. I've been through experiences like that. But what that taught me was, you need to play the long game, and that every time something bad happens, like what we're experiencing right now, there's tremendous opportunities always in those moments, and you need to be looking for them. When everybody's happy and high-fiving each other, and around the barbecue, having a Coors Light, bragging about how much money that's when you should be fucking selling. But right now is the time that you guys should look at as a tremendous opportunity in your life. And I'm not talking necessarily about our protocols or Pulse Chain or anything like that. I mean, just the financial havoc that is coming and happening already is a tremendous opportunity. So this time around, I'm way less worried. I know exactly what to do. I need to build. I need to, get things going, and not worry about, the bullshit going on around me. So yeah, that's what I would say about that.
That's awesome. Yeah, Dylan, do you care to share? If this is too personal, we can move on. But do you have anything to share there?
I mean, I've got some trading stories where some trades went belly up and stuff, and lost my ass a few times. But
Same here.
Yeah, I mean, we've all been there, done that kind of thing, right? But I guess the thing I learned from that was keep at it and never give up. So I mean, it's not a gnarly story or anything like that, but yeah, some trades that went belly up.
Yeah, but no, that like you said, that's a story that I think we're all pretty familiar with, and so yeah, for sure. Okay, guys, I really appreciate that. So why don't we finally delve into kind of what exactly we're building here? So do we want to start off here with maybe we can describe what Fiat is, then we can do the same thing with Famous there after.
Hey Dylan, could you maybe take control of the screen and maybe bring it up, and I'll do like a high level elevator pitch on Fiat. Yeah. So Fiat is a fork of Aave. What you want to know about Aave, if you're familiar with Celsius, BlockFi, and all these things that blew up, which are CeFi things, Fiat Aave is basically the DeFi equivalent of those. And the difference is that Aave is running beautifully. It has billions of dollars of TVL in it. And those other guys are all broke and need to be bailed out now, are going through Chapter 11 bankruptcies, and there's massive frauds behind them. But Aave is basically the way that whales will get yield. And so you can think of it basically as a bank on the blockchain, right? So you deposit money, and you get paid a yield. You deposit crypto and you get paid a yield. And just like at a bank, when you deposit money into Wells Fargo, your money then gets borrowed on the other side by people that are getting mortgages or car loans or starting businesses or things like that. And the way a bank makes profit is they pay you maybe 2%, and then they charge the guys borrowing maybe, let's say, 4%, and they keep the margin in between. That's 2%. And that margin is called the net interest margin in a bank. So this works very similarly, except it's happening all on the blockchain with algorithms, and supply and demand dictate the rates. So it's a very successful protocol. The performance of the token, which actually has kind of terrible tokenomics, is one of the best success stories in all of crypto. So Fiat.io is going to be the bank on Pulse Chain effectively. We did a sacrifice for it, I think, around April, May. We limited what we wanted to raise at around 3.6 for the protocol. We hit that target in less than 5 days, I think. This is now something that we're going to be bringing to Ethereum as well. So we're going to have this on both Ethereum and Pulse Chain. So I guess that's kind of the high level overview. Dylan, maybe you want to run them through. Yeah, sorry, go ahead.
No. Please go ahead, Dylan. You go.
Sure, yeah.
Dylan, maybe you want to run them through how it works.
Yeah, so you can see my my current dashboard where I have my collateral. I got $16,000 or $16 million of collateral, testnet money, and I'm borrowing currently $6.1 million. And most of this liquidity is being used on Famous right now, actually. But essentially you deposit your different range of currencies, and you can borrow the same or different currencies depending on what your preference is. And then different currencies have different LTV ratios.
Okay.
Yeah. So, like for instance, with Fiat, your maximum LTV loan to value is 50%, right? Whereas if you go to a stable coin, you'll be able to borrow 80% LTV and things like this.
I see. And,
yeah.
And how are those numbers determined?
The developers they set these rates based on.
So it's the team basically.
Yeah.
No. It's algorithmic, but
okay.
There are certain things that we do decide kind of from a qualitative standpoint.
I see.
So we're not sitting here deciding everything, but we will look at the risk of a token, a high quality stablecoin. Let's say like a USDC is basically as good as you're going to get, right?
Yeah.
So the more risky something is, the less you'll be able to borrow against it. So but the actual rates that you see that you borrow with are determined by supply and demand. And maybe just if you go back to the dashboard, Dylan, why might you want to do this? So, for example, let's imagine you have a lot of hex. And you run a business and you need to pay out some USDC to people, right? But if you've ever run a business before, that sometimes your customers pay you sporadically, or you have slow periods, right? So you can basically deposit $1 million worth of hex here, and then borrow $100,000 worth of USDC, right? And that gives you the working capital, right? So just like a bank would assist you with this. On the other side of it, the guys that you're borrowing from, they're getting paid a little deposit rate, so they're happy. But then the other side of this that people will use this protocol for is to get leverage or to hedge or to short. So you can actually borrow the thing that you want to short and potentially sell it on Uniswap or PulseX, and then you've actually created a short position in the asset. And this is important because this is one of the biggest use cases for this. The largest guys in crypto, the biggest whales in crypto, use these tools to kind of move their money around and manage their risk. So before they blew up, 3AC was a very big user of this. But you see that 3AC blew up, but Aave didn't blow up, which is an important distinction. And 3AC was also using BlockFi, Celsius, and all these other guys, right? And it took down all those guys, whereas Aave is still standing proudly because it's on DeFi. So you don't really need small users so much on this platform. You need the big boys. And another thing that this platform does is it enables flash loans. And that's very important because a lot of the arbitraging and financial engineering that happens in crypto employs flash loans.
Could you explain
which
flash
also pays
loans,
fees? Yeah, I'm not super technical, but basically, it's a risk-free way of borrowing crypto in a single block. And what that enables you to do is it enables you to basically take the money out and make a transaction on, let's say, Uniswap to arb the price of something, and then return that money in the same block, right? And for that, you pay a fee to the platform. So they're very sophisticated guys, with algorithms and writing bots for these sorts of things. And that's actually how we're finding the price and maintaining the price on things like Uniswap, because Uniswap needs those arbitrageurs to actually push price to parity across all the different pairs. So
is this something that Fiat enables as well?
Yep, it sure does. Yep. So the team is already doing flash loans on Pulse chain, right? And every time someone does a flash loan, they're basically paying fees to the people on the platform, right? And this platform does millions and millions and millions and millions and millions of dollars of fees every year. Speaking about Aave, sorry, in general. So it's like a very successful enterprise.
Absolutely. Now, there's so many interesting things we can delve into here, but just something I want to understand here, just for the sake of clarity. So you can deposit basically a set of cryptocurrencies here, and when you do, there is a market-determined APR for simply depositing your crypto. Is that correct?
Yep.
Yeah, that's correct. Dylan, maybe go to the deposit window and show them that. So if you
that's
look
a very
at this,
big deal, because this is potentially a less potentially risky way of getting an APR, or if you're simply going to remain liquid, this is one way in which you can get yield. Now, can you describe the risk of simply depositing crypto? I mean, or in other words, where is that yield coming from? Why are you getting paid a yield?
So you're getting paid a yield because people are borrowing from you, and they think they can make more money borrowing from you than the cost of borrowing, right? So if they think they can make 10%, right, they're happy to pay you 2%, right, in order to get the exposure. In terms of the risk on the platform, it's pretty much this stage, down to exploitation risk. You also have contract risk, but this has been around for a very long time now, and nobody's been able to hack the contract, right? So I think that risk is quite small. I worry about the Earth losing its magnetic field probably more than I worry about that. But one thing that you could see happen is you could see failures of specific currencies on this platform that could lead to a shortfall risk. And this is all really well documented. If you Google Aave shortfall risk, you can read more about that in detail. For that reason, we have to be very careful about what we put on the platform. We can't put the dog coin of the week on this platform. It's going to be very high quality things. Right. Just like when you go to your bank, they let you borrow against your house. They won't let you borrow against I don't know, like maybe your sneakers, right? Right. It's got to be something that they think is going to be something they can seize and sell at a reasonable rate, right? So the collateral has to be high quality.
Now,
so yeah,
the numbers we're seeing here, this is testnet. Do we have any reason to believe that these numbers may be similar on mainnet, or do we really just have to wait and see once mainnet comes?
Well, you probably do have to wait and see, but actually, just looking at them, they can sometimes be unreasonable on testnet, right? But that's just because somebody's doing something without any common sense, and that person will probably get liquidated, or or the market will come and correct it. So actually, it actually looks pretty reasonable. I would expect low single digit deposit rates for stable coins. That's what you currently get on Aave. I would imagine that the hex borrowing rate should probably approximate the short-term staking inflation rate, because otherwise you might be incentivized to short-term stake. So that's probably around 8 or 9%, I think, right? So yeah, I would imagine that these things are not terribly. They might be indicative sometimes, but not all the time. To answer your question,
I got you. Is there any other feature set here on Fiat that we haven't covered yet? Have we covered staking?
Sure. We haven't covered staking. So now that we've explained the platform to you, I talked earlier about the net interest margin or the fees the platform makes. So in Aave, those fees basically go to the Aave Foundation, whereas here in the platform, it goes to people who stake the Fiat token. It's called PHSAC on testnet, but when this is live, it'll be called Fiat. And so what you can see here is that Dylan is a whale. He's got 1.22% of the staking pool, and he's earning rewards. So you can see those rewards ticking up on the lower right hand side in real time. And he can, anytime he wants, he can claim the rewards, and he can take the test pulse out. So this is a pretty interesting thing. So if this platform becomes the dominant borrowing and lending platform on Pulse Chain, you can imagine quite a bit of volume will be happening here. So that's what Fiat, the Fiat token represents. It represents basically a claim on all the fees of this platform. And yeah, we're pretty proud of these tokenomics. We think they're much better than what Aave provides, which is why I think we can potentially even take a little bit of their market share on Ethereum when we launch on ETH.
So that's super interesting. A couple things there. I noticed that you're not simply gaining APY in one token. You're earning APY in a bunch of tokens. So if you're staking Fiat, are you earning a piece of every crypto on the platform?
Correct. Everything that's on there is slowly. Yeah. So it's cool in a way because it actually provides a little bit of diversification as well.
Yeah. I wish Motley had bothered me earlier when you guys were doing the sack face, because that's super interesting, man. That's really cool.
Yeah.
And you said you guys plan. So two things. You said you guys plan launching on ETH. Any ETA, any timeline on when that might be?
Yeah, I would say we're targeting kind of Q1. I don't want to, speak out of turn for the devs, but the code is something we're pretty happy with. So we're gonna basically spend the next month with the famous sacrifice, and simultaneously the devs are going to be putting this up on testnet and going through the paces with that. But what that means is you're going to be able to borrow and leverage Hex on Ethereum for the first time ever anywhere. Because one thing I probably didn't point out to you guys is that this platform doesn't support Hex or Hedron or any of the tokens that many of you will care about. It tends to go after the most common accepted ones, right? So we have our own use case as well outside of what Aave does. And in my opinion, Hex is incredibly unlikely to be supported by Aave anytime in the future. And Hedron even less likely. So it's a good opportunity for the community to have the same nice tools that everybody else has, but for the coins that you care about. So that's one reason why we're doing this. If Aave already supported all of our tokens, then there wouldn't be much of a reason for us to do this, right? But nobody has. It's been 3 years, so we're doing it.
And not just that, but the token model itself acts as a tool to potentially attract Aave users onto Fiat as well. Now, but before, just to wrap up on the Fiat tokenomics point, we mentioned the staking. Could you briefly describe exactly what the tokenomics are? Max supply, inflationary, deflationary. Just let us know what the tokenomics are of Fiat.
Dylan, you want to go with that one? Sure. Yeah. So basically, there's a max supply, 55 million coins, 55,555,000 coins.
Oh, is it 555 coins?
Exactly.
Okay, yeah.
And that supply is fixed. It doesn't inflate or deflate. Unless somebody sends their coins to the zero address, right? But probably not going to happen. But so there is the max supply. Basically we just went over how the stakers get a share of the revenue of the platform, based on market conditions, right? So if everybody's borrowing and lending all of the various coins on the platform, you get a share of those those APYs that the lenders or that the borrowers are paying the lenders, which is really, really intriguing. So, but yeah,
I was going to say, Dylan, it's the tokenomics of this are different than what you're used to with most tokens as well, right? Most tokens are greater fool's games that require you to basically find somebody to pay you more money, right? Even things like Hex, where you receive inflation, that's you're being paid inflation in the same token, right? So this is a bit different than what you're used to, and it's not to say that those models are bad. It's different in the sense that even if we don't market this, right? Even if none of you guys know how to use this, so long as the whales come and use the tools, this thing will create fees, lots and lots of fees, and those fees will underpin. Yeah, those fees will underpin the value of the token, right? And there's a lot of guys that already know how to use Aave very, very well, and they have a lot of money, right? So we want to invite them to come participate in Pulse Chain and to come use flash loans, to come arbitrage things. And these are the biggest people in crypto. And they will tend to come where they think they can make money. And that's usually in markets that have mispricing, and are relatively new, right? It's pretty hard to make money doing arbitrage stuff in, let's say, the traditional finance world these days, because there's so many people constantly trading everything that you have to literally have, massive information advantages and do these things in nanoseconds, right? I don't think Pulse Chain is going to be like that. So I'm inviting all those guys to come use our tools and come to this community, and I think that's very bullish.
Right. Now, one point I'd like to get some clarification on, because you guys mentioned you're launching on both Pulse Chain and Ethereum. How does that affect the tokenomics? Because if the max supply is 55.55 million, will that be on both chains, or is it that on each chain? Will you be able to bridge supply from Ethereum over to Pulse Chain? Therefore, will there be, because let's say you want more API in Pulse Chain coins, therefore people could bridge the fiat tokens from ETH to Pulse Chain. So I'm just trying to better understand how supply is going to work on the two chains, and if there's the ability to bridge over the fiat tokens and get APY on one chain over the other.
So that's a good question. Yeah. That is a question that makes sense. The answer is that we're going to have two independent tokens, one called eFiat and one called Fiat. Fiat's the Pulse Chain version. You get to choose. If you sacrifice for Fiat, you're going to get both, right? And for the famous sacrifice, a small portion of the famous sacrificers that participate in the early bird famous sacrifice will also get some eFiat token as well. That's coming out of the treasury. But from the tokenomic perspective, they're going to have two different sets of cash flows and two different sets of protocol risk, right? So if Pulse Chain does really well, the fiat token, should do better, right? If Pulse Chain does terribly and but Ethereum does really well, and you could see the if eFiat token doing better. If Ethereum gets hit by a comet and destroyed, but Pulse Chain is standing strong, then eFiat token gets destroyed, but not fiat. Does that make sense?
Yes, it does. But I'm hoping to get a little bit more clarification on the specifics of how the supply works. So, because we're on two chains, is the supply 55.55 million on each chain?
Yeah,
correct. That's right.
Perfect. And again, just to further clarify here, for the sake of the audience, will you be able to bridge eFiat over to PHIAT?
That's not something that we'll do.
No, okay.
I don't think we get. I don't think that's. You probably wouldn't want to do that because you would probably want to stake or sell it. To be honest, right? Because if you're just holding it, liquid, you're missing out on all the fees, right? So most people are just going to stake it and leave it there for a very, very long time and collect the fees, right? Okay. But yeah, so the whole bridging thing is less relevant, I think. But it's possible someone might try to do it, but it's not something that I'm going to be doing.
Okay. All right. Perfect. And so we had a sacrifice phase for Fiat. Is that over? Is there still any way to get into Fiat, or do we just have to wait until mainnet?
For Fiat
For
on
Fiat.
Pulse Chain, you're gonna have to wait on mainnet for that. But if you want some exposure to eFiat, you still have that opportunity through sacrificing for the early bird famous sacrifice, which I would say is coming rather imminently.
Okay, perfect. So let's delve into that. We spoke a little bit here about Fiat. Let's transition to talking about famous here. So number one, what is famous, and when is the sac phase coming?
Yeah, great. So Dylan, maybe you can bring it up on your screen. Famous.io is a leverage trading platform. You've probably seen things similar to this, things like BitMEX. This is a fork of a very successful protocol called GMX. We've made quite a few changes under the hood. But what this is enabling is derivative trading of your favorite Richard Hart coins and favorite ecosystem coins like Hedron. So you can get 10, 20, 30x leverage. You can go long or short. This is going to be a first as well for the community. This is different from Fiat.io in that this is all basically a player versus player derivative game where somebody's going to lose. And it's all happening in the protocol. Whereas with Fiat and Aave, it's actually a spot contract where you're basically using real hex and borrowing it and lending it, etc. With this, basically, you're placing your money into a pool, and your position will either make you money or lose you money. They're both useful. They both have different use cases. You can use them as well together as a strategy. But this particular thing is a price taker, which means it uses Oracle pricing. So when you trade here, you're not actually influencing the price of anything directly, right? Whereas when you borrow and lend and then sell or buy on PulseX using Fiat, you actually will influence the price. So yeah, this is something we're very excited about. These things have very strong use cases. They throw off tons of fees. And as a famous token staker, and we call our token FAME, you get to earn fees on this platform. So you stake similar to Fiat, and you get paid out rewards based on the amount of fees being generated by the platform. The thing that we're forking, it's been around for a little bit over a year on Arbitrum and AVAX, and it's done $120 million US in fees, which is quite impressive.
Over how long?
About a year.
Just over a year.
Oh, okay.
Yeah.
Right.
Yeah. So, and that's in a bear market,
Right.
and its tokens actually been going up pretty steadily year to date, which is also very impressive. It's worth about $500 million in market cap, which is yet again super impressive for something like this. Because what you have to think about is those fees that it's already paid out, they're not part of the valuation for the token, right? That's past tense, right? So it made these people $120 million in fees, and the valuation of the token is going to reflect the future of the fees, right? So
yeah, and that makes sense.
So that's about
yeah. If you look at the traditional finance world, if you have a business that's making 125 million, there's typically like a 4 or 5x multiple on the valuation of that business. So that kind of tracks. Makes sense. Now I got a bunch of questions here. Number one, what fees does the famous platform charge?
Yeah, so I think there's 5 types of fees. I probably can't list them all from memory off the top of my head, but basically anytime you trade, opening or closing a position, you're causing a fee, right? And that goes straight to the FAME token stakers, as well as the PHLP pool. We didn't talk much about PHLP, but PHLP is like an LP token, where you get a portion of the fees, you get 60% of the fees, but you also have you're also essentially taking the risk that the traders are going to get things wrong, right? So you're hoping that the traders get it wrong most of the time, which they usually do. So you're betting against the traders with PHLP. With Fame, you're just getting the fees. So if the traders are right, more often than not, which usually they aren't, you don't really care. You just want to see a lot of volume. So one of the things I love about this protocol is it's fair, because if you go trading on, BitMEX or, Binance or some CeFi exchange, you don't get to be the house. They always win, right? Whereas on this protocol, it's up to you. If you want to speculate long or short, and you may have good reasons to do that, you can do that. If you want to bet against the traders and just be and assume that they're going to be incompetent, you can do that. If you just want to bet on the protocol that it's going to be useful and get a lot of fees, you can stake the Fame token. So we can do some combination of all of the above, which is probably what I'll do. Opportunistically, I might take shorts out or longs, if I think I need to hedge, part of my portfolio. Let's say I think, PulseX has been on a very good run, and I'm worried that it could drop precipitously. So to hedge out some of my personal exposure, I can take a short on it, right? And I may be right or I may be wrong, but if my only other option is just to sell it, right? And sometimes it's staked if it's hex or things like that. So this just provides people the flexibility to manage their risk accordingly. Obviously, it can be used as a speculation tool as well. It's not how I would use things so much, but you can definitely do that as well. If you want to get $100,000 exposure to hex, let's say, but you want to do that slowly with a limited amount of risk, you can use 10x leverage here and only risk $10,000. So if you're wrong and hex moves against you at first, you can basically benefit from having limited downside risk. So these are great tools that are used similarly all over the financial world. Richard, I think rightly tells the community, don't trade, don't speculate, stake. And I would agree that that's pretty good advice for average people. On this platform, if you don't understand these tools very well, then I would say, staking the Fame token or providing PHLP might be a better option for you. But we do need to have these tools. And if we don't have them, someone else will build them, and they probably won't be from the community. They won't be, people that are day one hexagons, and they won't be nearly as fair. And they also probably won't be DeFi. And the problem with that is, those guys don't care about us, and that's what's currently happening in crypto at the moment everywhere else, where over time guys like CZ and Sam become the biggest holders because they basically run these massive platforms that are effectively the CeFi equivalent of Fiat and Famous, and they basically gather up the largest bags, and they start to make backroom deals, and they start to control your blockchain. I think this is an improvement on that, and those guys are definitely going to come to Pulse Chain, and people will probably want to appeal to their authority because they're rich, because they have Lamborghinis. But I would encourage you guys to use DeFi whenever possible. That's what I do, at least.
Absolutely, couldn't agree more. And man, I got so many questions here, but just to perhaps get the audience involved here, I saw one person further back ask, "What if Pulse Chain doesn't launches? What's the plan?"
Yeah, so we're going to be a multi-chain team, as you can see, with Fiat. We're launching on Ethereum probably before Pulse Chain, it looks like. But that is a risk. I think it's a small risk. I think the more likely risk is just that Pulse Chain is delayed, which I think is a reasonable thing. That's part of why we're doing this sort of early bird sacrifice, because we know we can launch Fiat on Ethereum in early 2023. and the incentive there is that you're going to get some liquidity from that. And if you're a fiat sacrificer, original fiat sacrificer, you'll get some liquidity from that, which I think is nice. But I do believe Richard's going to get there. I mean, the spec of what he's doing now is probably a lot more simple. I think we'll probably see a V3 in the next a couple of months. So I'm pretty optimistic about that. And I'm not an optimist in general, Brandon. I'm known as somebody who's usually pretty critical, but I do think we'll get there.
Yeah, I certainly hope so. Now, guys, I definitely want to get to the point where we're going to talk about the sack freeze, but I do have a handful of questions that I would like answered, just because it's cool to talk about these little interesting details. So I understand kind of the utility of the FAME token. You stake it, get a portion of the fees accrued by the platform. What I didn't understand personally as well was the PHLP token. Could you help me better understand the use case and the utility of that token? I just didn't understand that as well. So forgive me, I'm a little bit slow.
No, not at all. I didn't spend as much time on it. So, and it's actually a little bit harder to understand the nuance of it. So, Dylan, if you maybe go to the composition page there, scroll up, I think it's dashboard.
We talking about the main page, or are we talking about
Philip?
No, you gotta, yeah, there you go, that one. So PHLP is the liquidity of the platform. So it works similar to Uniswap or Curve, which you guys are probably more familiar with. And when you deposit money into the PHLP pool, you no longer have that specific thing that you deposited. So let's say you deposit USDC, you now have exposure to this entire index, right? And it's going to be about 60-40 crypto and stable coins. So it actually acts like a balanced portfolio a little bit, in a sense, right? You're getting broad exposure to all of those tokens. When they go up and down, you bear that risk, right? However, additionally, you're also being paid 60% of the platform's fees. So every time there's a transaction, this pool is getting 60% of those fees.
Where does the 40% go? Sorry to interrupt you. But
the 40% goes to the FAME FAME token holders, the guys that stake that. The other thing I was going to say is, however, you do have the impermanent loss risk inherent of betting against the traders. So if the traders are right all the time, then you're going to lose as a PHLP guy. But usually what happens is, even in up markets, these traders are usually wrong. And that's because they're oftentimes hedging anyway, right? So they might take the opposite bet of their core holdings. So that's what the PHLP token is. Now, an important difference between PHLP and FAME. FAME has a finite supply that never expands. It can only get smaller through people, burning or losing their tokens. PHLP, on the other hand, is elastic. So it can get larger or smaller, just like Uniswap pools do.
Depending on user deposits.
Exactly.
Yes, correct. So there'll be an APY number that you'll see associated with PHLP currently. The larger that number gets, the more incentive it provides for people to provide liquidity, right? Just like on Uniswap. So if you can get 40% yield, you're likely to get somebody to go, okay, I'm going to deposit more liquidity, and that knocks it down to a kind of a more equilibrium APY. So PHLP is very interesting as well, but it's more of a bet on the underlying tokens here, that the traders are going to get it wrong, and then that the platform does well, which they usually do. Yep.
Right.
Whereas with FAME token, you don't. It's a lot less complicated. You're just getting a cut of everything that the platform does, and you don't have to worry about these tokens going up or down. So long as the platform does a lot of volume, that should underpin the value in the FAME token.
Okay, and to further clarify as well, you only get PHLP from depositing funds on the famous platform. Is that correct?
That's correct. Yeah. So you go there and you hit the buy PHLP button, and that will basically there you go. So if you want, you can buy with any of those currencies. It'll incentivize you by giving you a discount to add the ones that we need more of, but you can deposit pretty much anything you want that's on the platform.
Yeah, so like right now we have too much hex on the platform, so you're being charged an exorbitant fee. So and then you'll see like with Pulse the fee is less because we're a little bit underweight on Pulse. So it's dynamic. It depends on what's going on with the market and everything like that. So
That's
if there's any maxi bros in the audience, please deposit some maxi, guys. And then you can do interesting things now too, because it's like you'll want to. In a perfect world, I'll get all the different maxi coins on here, and we'll be able to start to bet, arb them and bet against 5-year, 1 year, 15-year maxi tokens, and see which ones we think are overvalued or undervalued relative to each other. So that would be pretty cool. So yeah, if you're part of any of these communities outside of the Richard ones, like I think you should be excited about this platform. This is a big deal for those tokens. And I put Zen there just for fun because I think it's a good short.
Sure, right, yeah. And so I'm trying to understand where does the famous platform derive its liquidity from? Is it from this pool exactly? Because what I'm trying to get at, because since this pool is finite, will the leverage available on
this one's not finite. This one can expand.
It can expand, right. Of course. Well,
but we do control its size, but it has the ability to expand.
Right, but it expands based on user deposits.
Exactly. Yeah, you wouldn't be able to borrow more than what's on or in these liquidity pools, essentially. So.
Okay. See, thank you for that clarification, because that's what I was trying to understand. So theoretically, there might be a case where you're trying to 30x, but if everyone out there is trying to 30x, you might not be able to, or the fees you pay will increase. Does that kind of make sense?
Correct.
Yeah, we can see that down here. The available liquidity for like shorting hex, is only 1.3 million because other people have positions open, essentially. So
I see. So fees will increase as demands increase, and if everyone is trying to long hex at the same time, presumably the leverage will be artificially capped. Is that kind of correct?
So we have control over the global supply, what's allowed to be deposited, anyway. So it is possible that you could find a point where essentially all the capacity is used up,
right?
On the platform, right. Which is fine. Like that's great. I hope to have that problem. It's annoying for the traders.
It's a great problem, but you're in so much demand. Yeah. Now, again, this might be too much of a particular point here, but I just find this stuff interesting. Would there ever be a case where the fee for depositing and getting PHLP is positive in the fact that you are being rewarded? Because I saw how there was a fee, right? For if there's too much hex, then you'll have a fee for depositing hex. But if there's not enough maxi, there will be no fee for depositing maxi. Will there ever be an incentive to incentivize a particular coin being deposited rather than just no fee? Does that make sense?
Yeah. So like you'll see instances where since we have an internal swap function where you can swap between assets, you'll be incentivized to swap between assets based on that particular fee to kind of reweight everything. So let's say you wanted to swap back and forth between hex and USDC. If you go from USDC to hex, you'll incur a very heavy fee because we have less USDC versus our target weight and more hex versus its target weight, right? But in the inverse, if you sell hex or USDC for hex, you'll be getting a really good deal with very low fees, essentially. So it kind of evens out, but there's currently no incentive to deposit these or anything like that. You just
Dylan, maybe good just to point out there. So this is a third feature of the platform that we haven't even talked about, which is the swap feature. So this is sort of an internal DEX, which Dylan just described to you guys. Sorry if that's confusing, but it's you have your long and shorts for leverage, and then if you did want to make a trade on these, swap one of these coins that are on the platform, you can, and it could potentially be very cheap to do it. So you could potentially be incentivized to use this over, your standard dexes, for example. Yeah, that's just another little feature that's there. Yeah, we probably don't talk about that one enough, but yeah, it's potentially quite a useful thing.
Interesting. Now, so is the liquidity on both Famous and Fiat only coming from the platform itself, or do you bridge liquidity from PulseX, from Uniswap, from Uniswap? Because you mentioned Famous is simply a derivative platform. So if you're swapping using Famous, I'm trying to understand where that liquidity is coming from. Is it coming from only the platform itself, or do you route orders from elsewhere?
So remember
No,
how
it's
we
coming
have
internally.
Yeah, so remember how we have this dashboard of our different weighted currencies and pools that we have within the protocol itself.
Mm-hmm.
You're swapping essentially between these pools.
Right. Okay. Thank you for that clarification. Right. And so this leads to another point as well. You mentioned you get your price feeds from oracles. Do you guys have a particular oracle solution that you guys use? Do you guys use multiple, or what oracle solution do you use?
No, we use our own, and we will use our own for the foreseeable future until we can be very confident that the oracles that are used in Pulse Chain are good. So we run those internally. It's called a fallback oracle, and we think this is best practice because it means that we're responsible for it, and we know it works. Or if it doesn't work, you know who to blame, right? Whereas if we use a third party oracle and they fuck it up, what are we going to do? Yeah. So, but longer term, we have the ability to move towards a more decentralized model. But in the nascent stage of Pulse Chain, we think this is the more prudent way to do this. And Richard said something similar as well on oracles as well. He says, I want the guys that building these things to be in charge. And he says the same thing about DAO, token decision making. Don't leave it up to the crowd. Leave it up to the people that really know the code really well and understand the risks really well, which I think is one of the kind of the cool things about this team that we've built. Our background is, managing billions of dollars and, managing risk every day. Right. And we've done this for years and years and years and years. And we follow the markets very closely. We live the markets, not just crypto, but everything. Right. And so we understand risk very well, I think, relative to most people that you'll find. And we also have a very strong numerical, quantitative, and computer science background as well. So I think we're the best placed people currently in this community to provide solutions like this. None of this that you've seen today is being done by consultants or third-party devs. This is all being done by the core team. So that means we know these things inside and out, and we're responsible for them. And we have been working together for many years. And we had dinner with each other, with their families, things like that, right? So it's a very close team, a very stable team. You've seen other projects, lose members, right, over the past year, right? We're gonna pride ourselves on being a very stable, boring team in that regard, and that's one of the things you should want, I think, when you're trusting, a platform like this.
Should put that on the website, stable and boring. Because that's a strength. That's exactly what you want.
That's a good thing in our part of the world. You don't want the hot mess.
Yeah, you don't want volatile and unpredictable.
You don't want a Kardashian running your bank or your trading
maybe
platform.
On the marketing front, but not on the design front, for sure. So maybe to hover on that point for a second, Dylan, I believe you're mainly a part of like the communication side of things. Buck, it sounds like you're more back end. Can we talk a little bit more about the team? Like how many devs do you have? How many people in total are involved in this ecosystem?
Yeah, so the core team consists of 3 people, 2 of which are devs, one of which is me. I don't do anything technical, so my advice is probably more strategic, thinking about more qualitative things, what tokens we're going to onboard, what things we can trust, where's the demand going to be, that sort of stuff. Thinking more big picture about the risks and things like that.
I gotcha. Right. Okay. Now, guys, before we move on here to the sack phase and stuff, I do have another question that's kind of bugging me. I hope you don't mind maybe these technical questions, but I find this stuff pretty interesting. So, one thing you mentioned was the fact that you guys are using an in-house oracle to get a sense of the price feeds. Now, it makes sense that the in-house prices within Fiat, within Famous, would be affected by the liquidity that's going on in Uniswap and on PulseX. But do we have any reason to think that what happens on Famous, what happens on Fiat, like for example, if someone's using Famous and they short Hex, they get liquidated, that should theoretically help the price of Hex go up on Famous. But why should it also then go up on something like Uniswap or PulseX? Could you help me understand if that's a function of arbitrage or if that's a function of oracles? Is this question making sense?
So this can get pretty complex, but you could see an instance where the short side of a trade is maxed out, right? And then you have somebody that's making the market, a market maker that has a lot of liquidity on Famous, okay, so that they would absorb the fees if, in case this person did get liquidated or these people they got liquidated, they would absorb all of those fees. You could see an instance where they would deposit PHLP on Fiat itself, which currently we can't do yet, but that's a plan that will happen, right? They deposit their liquidity on Fiat, use it as collateral, and then they go and move the market against these traders, perhaps, right? Liquidate them and capture the fees. You could definitely see something like that happen, just to wash out the excessive leverage. And in that case, when they do move the market and liquidate these guys, they capture the fees, and the price could be up a little bit higher than what it was or lower than what it was, depending on the side of the trade. But you could definitely see something like that happen.
Right.
So just a point of clarification here. So Famous is a price taker, right? So when you trade on Famous, you're not directly moving the price of anything externally, right? But it is very true that people all over the world in all markets are constantly trading against each other and trying to basically mess with each other, right? All over the place, right? And the same can happen here. You could see somebody potentially, try to wipe out shorts on this platform, by using, let's say, Fiat to borrow a lot of money and pump the price of it, right? That's in the game, right? So these are rather sophisticated things that can definitely happen and will happen. So currently, they do this on CEXs a lot, right? The nice thing about this though is at least is that you're going to be able to see it happening, right? And that it's real money. Whereas when it happens on a CEX, you don't know what kind of fuckery is happening on that CEX. Are those coins actually real? The price feed that's going into your oracle may or may not be will definitely impact you, right? But you don't actually know if it's all just a lie.
It's a black box. You really don't know what's happening.
Yeah, exactly. So yeah, no, definitely be careful, those of you that are trading always. That's true for everything though.
Right, and just to finalize on this point, and we can move on to the sack phase, because the liquidity on something like Famous and something like PulseX is a bit what's the word I'm looking for? It's just something on the tip of my tongue. It's a bit different. It's different. It's they don't really interact as much. Could we see a case and where the price on Famous of Hex on Famous and the price of Hex on PulseX are perhaps slightly different due to unique volatility conditions on one market or the other?
No.
No.
The price of PulseX is the price on Famous, if you want to simplify it, right? Until we start getting lots of different data sources where there's real volume.
Right, and
right?
it's the Oracle that makes sure the price is the same.
Yeah,
and the Oracle is looking at PulseX.
Perfect.
Price,
okay.
Right, and
awesome.
And going, this is the price of Hex, guys. So if you move the price of if you move the price on PulseX, you have moved the price. Full stop. Right.
And if you move the price on Famous, do you move the price on PulseX?
No, you never move the price on Famous. All you're doing is betting long or short on Famous, and the price is the price on PulseX, right? So as the price goes up on PulseX, the price on Famous is going to either give people gains or losses depending on what their position. So it's a price taker, as opposed to creating a price. So when you say, oh, you're going to have very thin liquidity, it doesn't matter. Because you're looking at the price on PulseX. So in order to manipulate the price, you're going to have to manipulate PulseX and everything else as well that comes later.
Okay, awesome. I appreciate that education. So, all right, so let's talk about the SAC phase here. So it's we can obviously see a use case for kind of decentralized leverage trading here. So are we going to have a sacrifice phase for Famous? What are the tokenomics? Let us kind of know everything that's going on with the SAC phase and the tokenomics.
Yeah, so we haven't published the details yet, and we will do that this week. But if you SAC for Famous, you're going to be getting the best rate that you will get for Famous. We're calling it the early bird sacrifice. It's possible we'll do a second sacrifice when Pulse Chain launches, but that'll be at a higher rate. If that makes sense. This will be capped. And so you'll have a good idea of exactly what percentage of the tokens you're getting when you sacrifice, and you'll also additionally get the benefit of getting Fiat tokens as well. So it's a 2-for-1 sacrifice. And the reason we're doing this early bird sacrifice for Famous is to provide TVL to Fiat. Right. Otherwise, we'd be pretty happy just to wait. But we want to launch Fiat as well. And to launch Fiat on Ethereum, we actually do need to have a decent amount of TVL on day one to bootstrap it. So that's the kind of logic there. So if you participate in this early bird sacrifice, you will receive both Fame token as well as Fiat token. And if you already sacrifice for Fiat, you'll be getting 5% of the Fame token for free as well. So any of you guys that did join us for that, that's an added benefit to you as well. So we want this to be community owned. These solutions. Obviously it's DeFi. Obviously, it's leverage trading, which can be controversial. But you're going to have this on Pulse Chain, and we want the community to own this. We don't want CZ. We don't want Sam. We want it to be you guys. So I can't think of any better time than at the bottom of a bear market, to get those people that are really dedicated to Pulse Chain and this community, to basically hopefully have the leading, DeFi version of Celsius and the leading DeFi version of FTX, right? Right. But to have ownership of that as a community, as opposed to some oligarch with a Lamborghini, that we don't really know what he's doing, right?
Yeah.
The Fiat team won't really matter once these protocols are launched. Their code. We're going to be minority owners of all this stuff, single-digit percentage owners. So you don't need to worry about us really turning evil, because even if we did turn evil, we're not going to be so influential that it will matter, right? Whereas all of crypto right now is waiting for CZ to come and rescue them, which is a pretty shitty position to be in, except for our community where we don't really care.
And that's a very interesting point there as well, man. Because like, there's multiple different kinds of game theory that is sustainable, but the fact that the team does have a minority sharehold of the price is a type of game theory that definitely has its benefits as well, especially in an environment where there's regulatory uncertainty. So for sure. So Buck, do we have to do you have to get going here? I gotta say I'm extremely thankful for your guys' time and being willing to educate us here.
I've really enjoyed this. Dylan can answer all the questions better than I can anyway. I'm a bit long-winded and old, but I do need to run. But yeah, I'd love to come back and chat about some more stuff, crypto related, hex related, sometime in the future with you guys. It's a lot of fun.
I'd love to, man. Thank you so much for coming on. Thanks for your time. All right, so I think that's Buck there, Dylan. Man, he's a super knowledgeable guy, eh?
Yes, sir. He's a great guy. He's been around for a while, and I've learned a lot from him. So
yeah, absolutely. So man, look, I know we've been going on for a little while here. I got maybe a couple more questions here. Can you stick around for a couple more minutes?
Of course. Yeah.
Perfect. Awesome, man. So in terms of kind of mentioned how the internals of Famous and Fiat are functioning in terms of minority ownership. Is that both the case with Fiat and Famous, that the team has a minority ownership? Is that the case?
Yeah. So I think Buck and the devs, they both own, all three of them each own like 6%. So it's each one of them has a minority share of it, right? So and that could change on Famous depending on the raise itself. So
right,
like the spread, right? So you know what I mean?
Right.
It could be less, it could be more, but it'll probably range around like 6 to 8% per person.
Sure.
Yeah.
Okay.
Semantics.
Yeah. Now, I want to ask you a question. I try asking every team, and again, if you're not aware of the details, maybe we can educate our audience on this later on. But I am curious if there's any element of Fiat or Famous that is immutable, or because this seems like a system that does require some kind of oversight on both the Fiat and on Famous front. So are the admin keys to the extent where the entirety of the base code and logic can be changed, or is there a layer of the code, a layer of the logic that is immutable, and then stuff can be added on top later on? Are you aware of the particulars on that?
It's mostly like the second point you made, where the devs have, we call them limited access governance keys, right? So they control different levers that like for instance the max cap on the max for shorting hex on Famous, for instance, is at 2.5 million, but there's plenty of USDC where you could theoretically short more, but there's a cap on that. You can set the target weights and things like this, but these keys, they don't have access to the funds on the actual protocols themselves, right? So the devs can't just go in there and dip their fingers in the honey, right, and then just take everybody's shit, right? So and same thing with Fiat, same concept. They set the TVL, and they set the algorithm range for what the market determines the APYs are for whatever you're borrowing, right? And then obviously the ability to add on more tokens and remove other tokens that go to the wayside or that are no longer sufficiently backed with liquidity, things like this. So that's pretty much what they can do with the governance keys and whatnot. So
okay, awesome. Is there anything in terms of future roadmap that we haven't touched upon yet, or are these going to launch pretty much completed?
Yeah, I mean, Famous is still being worked on testnet wise and stuff. We're still working out some UI kinks and things like this, and getting some community feedback. But Fiat, as you see it, as we saw it today on testnet, that's pretty much what you'll see. That's pretty much what it'll look like. Obviously, it could change looks and things like this, but as far as like feature set and stuff like that, it's that's what it'll be.
Right.
So,
Okay. Perfect. One thing I saw that we didn't mention, Fatty. Could you briefly describe to us what Fatty's all about?
sure, yeah. So Fatty is a wallet aggregator. Uh, Give me a second, and I will show you what it is.
Sure. Sure.
The link is not public yet, so I have to hide that from you guys.
Okay.
But this is a passion project that we've been doing. Out of our pocket. It doesn't. It doesn't. There's not going to be any sort of sacrifice or anything like that. This is just so we have it, and then also allow the community to use it, right? But essentially, it'll just be a place where you can view pretty much everything that you have going on Pulse Chain or Ethereum that has anything to do with the RH ecosystem and alike, right? So, eventually, once some of these things that haven't come out yet, once they do come out, we'll have the liquid loan tranches, and then the Power City thing, whatever that might be. We currently have Famous on there. You can see how much PHLP I have. You can see my liquidity positions in PulseX.
Oh, it shows you your liquidity positions too. That's cool.
Yeah. So, the general idea is you'll be able to see all of your hex stakes, your Hedron stakes, ICOSA stuff, even instance hex stuff. Let's see.
Okay. So kind of like a go-to place track everything within the ecosystem kind of thing.
Yeah, I think there is another tab I have here.
Oh, you even got an NFT tab as well.
Exactly, yeah. And so, you can see here where you have your hex stakes and things like this, where you can see how many days have been served, or
are those real numbers here? What are these numbers we're seeing?
Yeah, so
those are some cool numbers.
Exactly. So, you'll be able to see a variety of different things with this application. So, pretty bullish. This is obviously not done yet, right? But you should understand the general idea of what we're trying to do here. Just trying to aggregate all of your assets into one place, so it's really easy to track. It's a read-only wallet, so you wouldn't be doing any sort of transactions through this or anything like that. What you could do is you could connect your wallet and then add a bunch of your other wallets and make a bundle. So it's really easy to track all of your stuff across many different wallets, right? But yeah, essentially,
So
this is the general idea.
Yeah. So if a version of Fatty's ever asking you to confirm a transaction, then we know it's a scam, not the real thing.
Yeah, exactly. Yeah, we won't. That won't be a thing, right? You won't be doing any sort of transactions on this. This is literally just so you can view your stuff and have a really good idea of what's going on and where all your stuff is, right? So,
any idea of when this might launch? Is it going to launch alongside Famous, or is that uncertain?
So this is currently being done by some third-party guys. It's slowly ticking along, doing its thing. We've chosen to do that so it doesn't interfere with anything Famous or Fiat related, right? So with that being said, this thing is very labor intensive, so it could take a while. It could grow to be a beast just based on all the stuff we have going on. I mean, between Maximus, between the ICOSA stuff, the Hedron staking, when Liquid Loans comes out, having all of that integrated, the Power City stuff, it could just continue to get bigger and bigger. Yeah, so it'll get there, right? But don't expect it out anytime soon. But when it's here, I'm sure everybody will use it just because of you'll be able to see literally everything going on, right? So
yeah. Okay, man. So look, we've covered a lot. You've been very generous with your time. Is there anything we haven't covered yet that you want to get out there? Anything we should reiterate? Anything like that?
Not off the top of my head. I mean, join the Telegram. Stay tuned. Don't miss anything. The Telegram is in my name right there. t.me/famousx. Right. Stay tuned. Keep your ear to the wall. sacrifice probably will happen in the next few days, next week, maybe next 2 weeks. Who knows? So
Okay, so sacrifice near future here. Pay attention on Twitter. That's what do we got? Fiat.io and famous.io on Twitter. I'll leave links for the description for both the Twitter and the website after the stream's over as well. And yeah, man, look, I just gotta say, thank you so much for your time. You've been super generous. This has been really interesting. Man, look, true. Look, yeah, I've been in crypto a while too, and what I found is that people are really, really trying to chase narratives, new shiny objects, in hopes of trying to find value in financial freedom. But at the end of the day, one of the things that I think has proven itself to really have value in the space is DeFi, true DeFi, and the ability to participate in something that is true DeFi, that provides a needed service and get a portion of those fees is something 100% very interesting. And so, not financial advice, guys. I'm not a financial advisor, but I'll be paying attention to the upcoming famous SAC phase, and when Fiat comes out, I'll definitely be keeping a closer eye on things. So, man, thanks a lot for coming on. As we get closer to SAC phase, I'll probably be making updates on the channel as well. So, folks, like and subscribe, follow everyone, comment, share things, just say random things, even if it's hate crimes. I'm kidding. It's just for the algorithm. The algorithm likes you saying things. Yeah. So, man, look, do you have any final words here before we wrap up?
I mean, thanks for having me on, man. And join our Telegram. Go post your PNL cards. Go try and short hex to zero on test that. Try your best.
We'll get Eric Wall. We got to get Eric Wall to you guys. Have you talked to him?
Yeah, I talk to him. Relatively speaking, every other week.
Really?
Chats and stuff. Yeah.
Have you convinced him? Hey, man, like you short hacks here. Like put your money where your mouth
is. He is well aware that he will be able to short hacks. Believe me.
Okay, awesome stuff. All right, guys, this interview's gone long enough. Thank you so much for your time, everyone. Until next time, take care, folks.